was just also curious, like, as you mentioned earlier, you spent so much effort, right, raising, considering going back then, as a newly started hedge fund, you had like barely any numbers to show any records to show. Like, how did you raise like money from investors? Like, how were you able to convince them? Like just showing, for example, like some back tests or some numbers. Like, would that be enough? Like, what are some other things that you like offered? For example, like discounts or like better
Yeah.
terms or like lower fees or anything else that you kind of or I wouldn't say techniques, but any other strategies that you use
Yeah.
to attract them. Yeah.
That's it. So it's great. You actually mentioned one of them, which was giving lower fees and higher control is always
Mm-hmm.
good. So giving them, maybe a lower lockup period as well,
Yeah. Yeah.
more liquidity, lower fees are always good ways to attract investors.
Mm-hmm.
Another good thing is there's a lot of investors that are specifically day one allocators, meaning like they invest
Mm.
in we call emerging managers who are just launching their fund.
Yeah.
And so that's also one way that you can
Mm-hmm.
attract some folks as well. As just talking to the right people. We knew like
Yeah.
for us, we wouldn't attract institutional investors on day one because it
Mm-hmm.
was too early and we didn't have any track record. And so,
Right.
yeah, it's kind of like chicken and egg problem, right? And so
Yeah.
we decided like at least start small, raise a little bit
Mm-hmm.
of money, even if it's just a tiny bit, and
Mm-hmm.
just trade with something and scale over time. You don't just launch, $1 billion overnight. Like that's impossible. So it's a
Right.
slow kind of process. And
Yeah.
some other things, I'm trying to think of other things that helped. For us, like just being smart about fundraising. So like set a deadline.
Yeah.
We always say like, okay, we're closing. Let's see if today's like in September, maybe we're closing on November 1st, and that way you force investors to make a decision to have a
Mm-hmm.
timeline, and that way they have to get back to you by middle of October. And so
Mm-hmm.
that made it a lot easier. And then maybe we actually didn't close on November 1st. You can
Yeah.
technically close on December anytime you want, right? But it just
Right.
makes it easier. So then this batch of investors I talked to in September, at least I have all of their yes or no's by, it's kind of like sales. When you're doing sales, there's a concept called like
Yeah.
a sales funnel.
Yeah.
And like the goal
Mm-hmm.
is like you want to get to the bottom of the funnel as fast as you can for every single person, and then
Mm-hmm.
eliminate, like kick them out of the funnel as soon as you know they're not a good fit. And so by
Yeah.
doing that, we were able to get a yes or no from them. It's a no or a
Mm-hmm.
yes, and then just keep them going
Yeah.
really quickly down that pipeline.
Yeah.
And then I would say like
Definitely.
another piece of fundraising advice is during quarantine, it's really important to like be able to do like close around virtually sometimes. So like if you're raising money right now, using technology like we use like DocuSign to sign documents, or we actually use another tool called DocSend to send our pitch deck. And that way it's actually cool because it's tracking. So you can see if an investor views because of their email, you can see like how many pages they view, how many minutes they spend on each page. And
Oh
so it's
wow.
actually, yeah, really cool technology like that
Yeah. Yeah.
is good to utilize during this time. So yeah,
Yeah.
there's different techniques that help.
Mm-hmm. Well, thank you. Yeah. And was there anything else that you kind of like share with your investors to make sure that like have faith in you and believe in you, in addition to
Yeah.
the convenience you created and also using like different technologies and offering better terms.
Yeah, one of the biggest things is just making sure that they trust you as
Hmm.
people, right?
Yeah. Yeah.
And that even that we can protect their money, that we can protect their wealth and their assets,
Yeah.
no matter
Yeah.
what the situation is.
Yeah.
And that to help them set the right expectations. Like actually, we tell
Hmm.
them, look, we're going to have losing days, losing months, and that's something
Yeah.
that every hedge fund goes through. But
Yeah.
but our methods and our strategies, our technologies are unique and different.
Hmm.
And we're one of the
Yeah.
few opportunities. Most high frequency trading firms are
Yeah.
actually prop shops. They're not hedge funds. So they're a
Yeah.
different structure than us. And so we're one of the few opportunities where an investor can actually put their money in a hedge fund structure that does high
Hmm.
frequency trading. So
Yeah.
it serves as a diversifier for the portfolio, which is
Hmm.
nice. And that's the other thing is understanding where do we stay, where do we fit in
Yeah.
their portfolio,
Exactly. Yeah.
helps understand like what they're looking for. So
Yeah.
all of those things are important. And then also reassuring them, like, if they put their money in that they can get their money out,
Mm.
after a lockup period, or if there's no lockup, then that's
Yeah.
okay. They can, keep their money.
Mhm.
So it just really depends on the situation. But
Yeah.
there's
Yeah.
methods like that to be careful about.
Thank you. Thanks for sharing. And yeah, definitely, it's important to know what value you provide to them, right? And also, knowing like what exactly they're looking for, provide them like the most convenience to them. And it is also to my understanding that SoftBank owns around like 15.92% of your management company, and you seem to be the only like HFT in their portfolio, right? If I'm understanding right. And I just curious, like, why did you choose to raise your money from SoftBank? And was it for the
Mhm.
for prestigious reasons, or like for the credentials, or did you really need it? Or yeah, just out of curiosity.
When they first visited us in
Yeah.
Boston, I didn't know
Hmm.
who they were. Yeah, it's not like in Japan where everyone uses SoftBank. It's like so
Yeah.
popular, right? But
Yeah.
in America, this was before the Vision Fund, so like nobody knew in America like what SoftBank was. They had no idea that there was
It's
a guy
quite
in
early.
Japan
Yeah.
who was
Mhm.
investing billions of dollars into Uber and WeWork and all these other companies. We like nobody had any. That wasn't. That was still not happening yet.
Mm.
And so the biggest thing for us was mainly just making sure that they were investors we wanted to partner with, that they understood our goals, hopefully similar to their goals.
Yeah.
And that was the biggest thing. And then also realizing we had a lot to learn from them as
Mm.
they're very experienced investors. And so it just kind of made a lot of sense for us to
Hmm.
go with that kind of deal.
Yeah. Yeah.
That's the biggest thing, I guess,
Hmm.
for every investor, is just making sure that
Hmm.
our goals are similar, and also making sure like if we have maybe we have a bad year, bad time, trading doesn't go as planned, like how do they react, right? Like
Yeah.
if an investor gets like really angry or
Hmm.
like immediately switches sides, like almost like they lose trust in you, like that's not the type of person you want to partner with, right? Like you
Definitely.
got to feel, we feel like it's almost like a marriage, because like
Yeah.
marriages, there's always going to be fights, there's always going to be issues in a marriage, just nothing is perfect, but it's like
Yeah.
how do you react when you make a mistake? How do you react to someone, is says a lot about who you are as a person. So
Hmm.
and also like, oh, funny stories, average marriage in United States is 6 years, I think, before divorce.
Oh,
um,
wow.
but like, when you're working with these investors,
Hmm.
it's like I've worked with them for like what, like 8-9 years now, so it's a
Yeah.
much longer relationship. So be very careful about
Hmm.
how these marriages go, and make sure you're
Yeah.
careful who you
Yeah.
choose as your like partner in
Hmm.
the company setting.
Yeah. I really like the analogy that you made about your relationship with investors, and you mentioned that the like in a marriage that they also offer you a lot of help and they supported you. Like, how did they support you exactly? Like, um, just curious.
Yeah. So a lot of it is like the support from every investor is different, right? So some support
Mm.
is more like operational,
Yeah.
and just making sure that we, cover all our bases. Some support is more like legal compliance. So
Hmm.
making sure that we're up to date with the latest regulations and stuff. And then sometimes it's just even just introductions, like what are our biggest
Mm.
challenges? Do I need to raise money? Do I need to find more strategies or something? And so introducing us to other CEOs and their network and things like that is definitely very helpful too. So
Yeah.
yeah,
Yeah.
it's kind of like all of those things
Hmm.
combined. What can they help with?
Definitely.
And then some
Yeah.
investors choose to be hands off, actually. So
Hmm.
they
Oh.
just
Hmm.
maybe they don't want to.
Yeah.
They're not operators. They're not there to take over your company and control your
Yeah.
operations. They're more,
What? Yeah.
yeah, yeah.
What was SoftBank like? Did they offer you, were they more hands-on or more hands-off? Did
Yeah.
they offer you a lot of support?
Yeah, they offered support. They're very helpful, on a reactive basis instead of a proactive basis, meaning
I see.
like, yeah, so
Mhm.
they're not trying to look over my shoulder every day and
Right.
control
Yeah.
operations, but they're
Yeah.
reactive in terms of like,
Hmm.
if we have any problems and I send
Yeah.
an email, I'll get a response with some
Yeah.
advice or something.
Yeah.
So yeah, that's
That's
the kind of help.
nice. Yeah, it's good to have the right balance. Yeah.
Mhm.
Yeah. Thanks a lot for sharing. And I would say, before we move on to like, as your new company, my one last question about Domeyard would be how you guys are doing throughout COVID-19, because it's such a hard time period, right? And I know a lot of companies aren't doing that well. And how's Domeyard performing
Yeah.
throughout the
Um,
tough time period?
Yeah, it's been kind of similar. We've had a roller coaster of a year.
Wow, I
You
bet.
know,
Yeah.
we've had really good months where we're like
Mm-hmm.
up really good, solid double digits or something. And then,
Mm-hmm.
in a month, which is like really impressive for
Yeah.
us. And
Mm-hmm.
then we've also had really bad months where I think the worst month we were down like maybe 8 or 9% as well.
Mm-hmm.
So like it's
Wow.
also down, but it's a part of the process of, doing
Yeah.
a stuff. And it's like a norm, it's normal. And so the
Yeah.
biggest thing that we kind of teach ourselves and our team is like
Yeah.
to distance our emotions, because like
Mm-hmm.
you can't just have your emotions based on if the fund goes up you're happy and then if the fund goes down you're sad. A lot of amateur traders are like that, and that's
Yeah.
but it influences your decision making. So if you get
Yeah.
emotional you tend to make really bad decisions for yourself sometimes. And so you have
Mm-hmm.
to look at the bigger picture of where
Mm-hmm.
things are going and realize like things, no matter what happens, things will be okay, and like it's not going to be that big of a deal in the end. So
Absolutely. Yeah.
seeing that bigger picture and realizing that we're still lucky, given what's been happening out there. Like that's really what matters. So
Yeah.
yeah.
Thank you. Thanks for sharing all that experience. It's super helpful, and I'm sure our audience definitely finds it very helpful as well. But yeah, earlier you mentioned your new company that you're going to that's going to take your full attention. Databento. First off, it's such a cute name, right? And congratulations. I'm really happy for you that you took a leap of faith and decided to start a second company, right? How is that going so far? Like, how's everything?
Yeah, so I initially started Databento because like we had wasted over $1 million on data, like market
Oh,
data and
wow, that's a
alternative
lot.
data. It's
Yeah.
a lot, yeah. And we were using less than 5% of the data that we purchased. So it was like
Mm-hmm.
a big waste of everything.
Mm.
And also because a lot of the data systems are very outdated, they're very backwards. So, you
Yeah.
have to install a keyboard or install a
Mm-hmm.
phone, install like a terminal. And we realized like this is like it's already 2020, and you should be able to access data from home,
Mm-hmm.
from anywhere, and also
Yeah.
just pay for only the data you need, and you don't have to pay
Mm-hmm.
for the entire exchange because that's way too much data for most
Yeah.
companies. And
Yeah.
so that's why we started Data Bento. And it's kind of like the concept is smaller size data in like bento box, so it's like a portions of
Yeah.
data basically is the
Yeah.
the theme, I guess. But it's been really fun. I
Yeah.
love it because it's just
Mm-hmm.
one is because we're making a big difference for people. There are a lot of startups who are starting their own hedge funds, and they
Yeah.
say, "Oh, I love, we want to use your data, and
Mm-hmm.
basically that way they can launch faster
Yeah.
with our
Yeah.
data, save money, and grow with us as a company." So as they grow their business, our data is the best quality that's out there. I can
Mm-hmm.
almost I can't guarantee stuff, but I'm very confident about it because
Yeah.
we've done this before. We know how to rank our
Yeah.
data.
You work in a
So we
hedge
have good
fund, so you know what's
quality.
good quality data, right? Yeah. Mm-hmm.
Exactly. And so yeah, we can grow with their team as they get
Mm.
faster or smarter, whatever they want to do, we can get them the data that they need. So that's been really good.
Mm-hmm.
And
Yeah.
then I guess the other thing is like for me personally, it's been a good learning experience because it's the
Mm.
first time that I've basically brought a product to market and actually marketed and
Yeah.
sold a product. And that's
Yeah.
been really fun as well. I
Mm-hmm.
love it. So, and just the fact that I'm supporting small
Yeah.
businesses and teams as well,
Mm-hmm.
small teams within large companies too. That's been definitely really fun and meaningful. So yeah, it's been
Yeah,
fun.
yeah, for sure. And you mentioned that your potential customers might be like hedge funds or other like financial institutions. So your data is definitely more institutional quality, right? And I wonder for your data, like how do you make it like institutional quality, and how do you like for example like customize the data? And I understand there are so many like data vendors out there. Do you think it's a red ocean, or like if not, like how do you like why did you decide to like still join the market, right? And how do you again like differentiate from yourself from your competitors?
Yeah, so fortunately, this is an industry that because we were in the hedge fund space for so long,
Yeah.
we know the data space pretty well too. So
Oh,
we're
yeah.
we're the only vendor that offers the kind of institutional quality. We call it, it's like level 1 through level 3 order book data,
Yeah.
live and
Wow.
historical, and
Mm-hmm.
that we offer it at an a la carte basis. So
Mm-hmm.
meaning that you
That's
can
really cool. Yeah.
customize based on even frequency. You can choose like, I just want daily
Wow.
frequency. That's going to be cheaper than minute frequency, which is cheaper than nanosecond frequency. So it's
Mm-hmm.
very customizable. And
Ah, I
then,
see.
yeah, and then also you can choose like which products. So maybe I just want, I don't know, Google and Apple stock, or just a
Yeah.
few out of not the entire exchange. That's
Mm-hmm.
okay as well. So it's very customizable
I
down to that
see.
level. Mhm.
Yeah, yeah. Well, that's really amazing. And it is indeed a bento sort of concept behind that. You can like pretty much, choose your data, align, like pretty much align your data and make sure everything works perfectly to your needs. But yeah, I was also super curious that, since you worked in the hedge fund, you started a hedge fund before. Was it like, the reason that I was curious about the reason you started Databento around this timing, and also whether you like pretty much incorporated or used any technology that you brought in technology over, like from perhaps Domeyard, and whether there's any
Mhm.
like synergies that you're trying to create, like perhaps like the data you create at Databento, you
Mhm.
would offer it to Domeyard, or like whatever technologies that you used or created from Domeyard, you're bringing it to Databento.
Mhm. So yeah, there are two completely different companies, and
Mm-hmm.
if Domeyard were to do anything with Databento, it would be just like treated like a regular customer, just like everybody else, basically.
I
So,
see.
so yeah, I don't
Yeah.
think it's difficult for partnership. Like on the Databento side, like there were some hardware pieces that, for instance,
Yeah.
Databento initially
Yeah.
just bought over from Domeyard because it's like, well, Domeyard doesn't need it anymore,
Mm-hmm.
and Databento does need like more data related stuff, so we were able to just buy over certain things and also
Mm-hmm.
transfer over maybe certain types of licenses and things like that for
Mm-hmm.
data. And then eventually Domeyard would just become a client like of the business, so, but they're two separate companies though, and
I
there's
see.
no like advantage gained, I guess, from
Uh,
either firm. It's just more like
yeah.
we happen to have some infrastructure lying around that
Interesting.
was
Yeah.
useful on the data bento side. So we're like,
Yeah.
well, might as well just, do an
Yeah.
official purchase and
Uh-huh.
just record everything and, and
Yeah.
then go from there. Yeah.
Yeah. Wow. Interesting. And sorry, correct me if I'm wrong. I just wanted to, make sure if I understood it correctly. So some of the technologies were transferred from Domeyard, and some you mentioned were acquired from somewhere else, or you guys did
Um,
develop from scratch.
It's developed from scratch, yeah. But in terms of
Oh,
technology,
I
like I'm
see. I
talking
see.
about like hardware or
Oh, I
like
see.
a
Okay.
computer, like like a
Oh, okay.
monitor.
Yeah. Yeah.
So
I
things
see.
that are easy to kind of purchase that I was like, well, we need
Yeah.
this, and Domeyard has like 14 monitors lying around, so can we just give
Mm-hmm.
this monitor, but we can't just give it, right? So Domeyard has to sell it because it's an asset,
Mm-hmm.
and so we just initiate this asset transfer type of thing.
Right.
So
Right.
yeah, it's just these little monitors and like hardware
Yeah,
pieces
I
and
see.
things like that.
Yeah,
Yeah.
I see. So like no technologies like transfer from Domeyard to Databento, and you develop
Yeah.
everything from scratch.
So
Yeah.
there's no IP that was
Oh,
transferred
I
over.
see.
Yeah.
I see. Thank you. Yeah, I just wanted to clarify a little bit because I was just I thought it was a very smart idea if I were to start a second business, right? But I
Mhm.
also totally understand that you kept both companies like separate. I'm sure
Yeah.
you had your own reasons as well, but yeah, that's totally
Mhm.
understandable. And I also think given that the majority of the hedge fund out there, they spend so much money on data, and for some big players, they would spend like millions of dollars, and I know some like hedge fund, they would spend like the hedge funds with more than like 5 billion in assets, like they would spend most of their time like searching for money, and also like sorry, I mean like searching for like data, and it's just how crazy data, how crazy important data is within the industry. And in addition to like you mentioned earlier, like creating a new company and creating technology from scratch, I wonder like how are you like planning on doing it this time, and compared to like last time when you when it took you like 3 years to create everything. Like,
Mm-hmm.
what's your approach this time?
Yeah, I think it's kind of like you learn lessons from the previous business. So
Yeah.
definitely, making sure that we outsource the functions that can be outsourced.
Hmm.
Make sure that we use other people's, if it's software that helps us launch faster,
Yeah.
we don't want to reinvent the wheel. It's kind of like, if it's already out there, we might as well just, become a customer of other products out there, and then
Yeah.
use those types of
Hmm.
tools and products. So like one example is
Yeah.
like Slack. We use Slack to
Hmm.
communicate, or we
Yeah.
use a product called Monday for task management, or
Yeah.
I don't know, what else do we use? Like we use Figma for
Hmm.
a lot of design and like front office related design stuff. And so
Yeah.
like those
Hmm.
types of things, like there's no point in building any of that,
Yeah.
right? It's just kind of like you
Yeah.
use it
Of
because it's
course.
out there already. So
Yeah.
it helps
Take
us get
advantage of it. Yeah. Hmm.
yeah. And then the good news also is because we already know who to work with, we know which lawyers to work with, we
Mm.
know in general which companies
Yeah.
to work with,
Hmm.
then it also makes our process of launching the product a lot faster than it
Yeah.
normally is. So
Hmm.
yeah.
Yeah, definitely, for sure. And I know your customers are right now probably more in the States. I'm assuming. Do you think you have any like plans of expansion? Maybe expanding to like other markets for like Databento. And if so, is there any timeline you're thinking, or so
Mhm.
yeah, like in terms of
So
like
right now, in terms of the
expansions.
data products we offer, it is
Mhm.
primarily it's going to be U.S. futures, equities,
I
and
see. Yeah.
maybe a little bit of FX
Hmm.
stuff, but not a
Yeah.
lot. And then we do plan on
Hmm.
getting more like European and Asian related
Yeah.
like equities and futures
Yeah.
products in the future. But
Yeah.
it's
Uh-huh.
depends on the markets and kind of what things look
Yeah.
like, and what the
Yeah.
demand is. So we're going to listen to our
Yeah.
customers and just see what they
Yeah.
want more and what
Hmm.
they don't have currently, and go from
Hmm.
there. Yeah.
Yeah. Thank you. Yeah. And speaking of timeline, I know you're a very well organized person, and you're very like driven, and you had like goals set, and you would achieve them. I was just curious for this time if you have any like timeline, like, oh, by what time I want to like go public, or I want to grow the firm by X, like times, or do you have any like goals like that, or any like timeline like limit like that?
Yeah, on my end, actually, my usually we're very strict internally about like,
Mhm.
making sure that we take each step at a time almost, and
Yeah,
just kind of go from there. But also having a bigger
yeah,
picture in mind of in the
definitely.
future, if there's an acquisition or if there's an
Yeah,
IPO, our goal is to be flexible in it, no matter what. So like a lot of
yeah.
it is also seeing what the economy looks like in the future,
Hmm.
and that's kind of out of our control. But
Hmm.
I do tell our team to be flexible about anything
Hmm.
that comes around. And
Hmm.
if there's a good opportunity that's
Yeah.
valuable, we might as well take it. But
Hmm.
there's nothing, I never say like, oh, we need to IPO by this date, or we need to do
Hmm.
something. I think it's more,
Yeah.
you take it a day at a time and just see like, is this company growing in the direction I want it to grow? Is it still enjoyable the way it should be
Yeah.
enjoyable? And then kind
Yeah.
of go from
Definitely.
there. Yeah.
Yeah, I think taking a step by step is always important, and yeah, it definitely gives the company more time to like, get ready as well.
Yeah.
Yeah, and I I was going to end this podcast, end this episode by asking you to like share some of your advice with our audience. Because I know you came from a finance background, right? With your internship with UBS, and also like Goldman Sachs. And it's kind of funny that there are also a lot of like other startups out there. They also had like founders with like some finance background. In fact, for our previous episode, we had a conversation with Databento, which is a company based in Japan that provides like online platform that connects like professional like connects people who needs professional like services with the providers out there. And he also like worked for JP Morgan, had experience in finance, and in addition to him, there were also other startups out there. And I remember a recent one was actually called StratiX. I think they are two Harvard grads, CS grads, and they started their uh, you know, uh, trading company, like trading software company. However, for them, although the background seems solid, they have background in finance. Unfortunately, the company already dissolved like quite recently. So that pretty much shows not every company like goes so well, even though the I would say the founders have like solid background, right? So for you, I was curious, like, would you recommend people also like going to finance or like, before they start their company? Is it a route that you would take again, or you would recommend other new founders to take?
Yeah, that's a great question. So first I would say like, in terms of failure, there is such a thing as like failing upwards. So meaning
Yeah,
like, even
definitely.
if most
Mhm.
companies fail, right? But no founder has ever said, "Oh, I totally regret starting my company. I totally
Mhm.
regret doing a startup." Mainly they'll say, "Yeah, my company failed, but it was a good experience. I learned more in 1 year than I learned in the past
Yeah,
my whole career,
absolutely.
and I had so
Yeah.
many more opportunities open to me because of those
Mhm.
experiences." That's
Yeah.
usually what I hear from founders. I would say
Yeah.
like in terms of careers, there's no such
Mhm.
thing as one perfect job or,
Yeah.
career path for everybody. So
Mhm.
meaning like you can, whether you start a company or you work at a big company or you're an artist or you're a full-time parent or whatever it is,
Mhm.
that all of those are respectable positions and occupations. And, so long as you like it, right? That's what
Yeah,
matters. So long as you wake up
definitely.
and you want to do that job, that's what's really
Absolutely.
important. I think in Japan, I know the culture is different. And so
Yeah.
there's, I think there's still a little bit more pressure. When I was working in
Mhm.
Japan, there was a little bit of pressure to like stay at your company, the
Yeah.
loyalty and,
Yeah.
staying. But, in America, the mindset is starting to change where
Mhm.
people, like for me, right, I tell my employees on the first day, if you want to use this as a ladder to the next
Yeah.
step in your career at a better company, do
Mhm.
that, and I will support you, so long as when you're here at my company, you are doing your best job, and you're being honest and you're doing your best work. That's what I care about the
Mhm.
most, right? And
Yeah.
so I think that's people are starting to be like that a little bit more, just because, realizing that this is life is not worth, it's not worth being miserable every day and
Mhm.
sad and not liking your
Exactly.
environment. And so you might as well. And one thing I always say to people is like, you're the average of the 5 people you spend the most time with. So, especially at work, right? Because if you work like like 12 hours a day in finance, you're going
Uh,
to spend the most time with the 5 people who are sitting like next to you on your team.
yeah.
And
Yeah.
so
It's
do
very
you want
true.
to be the average of those people? Do you want to be like them? And
Yeah.
if not, that's okay. That's, you're welcome
Yeah.
try something else and take a risk and do something new. The other thing
Mhm.
is like while you're young, like while we're younger, we don't have family or kids to take care of. It's actually easier to take a risk right now, even though
Mhm.
chances of success are so, much smaller when you don't have experience. But it's still awesome to be able to take a risk if you want to. So some people say, I want to start a startup one day, but what do you mean by one day? Is it,
Yeah.
10 years from now when you have kids and other priorities in mind, or
Mhm.
is it like
Yeah.
today, or when is that? So so just asking those questions is always useful. And then one, sorry, I'd like to do these exercises. One
Mhm.
other exercise I do is like,
Yeah.
imagine you're 100 years old in your deathbed and you're like, you look back on your life and you imagine like, would I be happy at my current company
Mhm.
for the next 10-20 years, for the rest of my career? Or
Mhm.
do I see a different timeline for myself? Would I be happier if my timeline, I don't know, it's kind of like the anime, like Steins Gate, if my
Yeah.
timeline was like
Yeah.
this timeline or this timeline, like which one
Mhm.
would I be happier? So like,
Yeah.
doing those kinds of analyses is, for me at least, really important to help me
Mhm.
understand that. That's what helped me understand, like, I want to leave Domeyard, actually help me understand that the hedge fund, I already had a good time. I did everything I wanted to accomplish, and it's time for me to move on and
Yeah.
do the other things I want to do before I get too old.
Yeah. Yeah.
So yeah,
Definitely.
hopefully that helps.
I totally agree. Thank you so much for sharing. I'm sure it'll be helpful to all of our audience, and also even to myself. I thought it was very thought provoking, because when I first, you know, when I first joined my company, I remember my manager, a mentor that I really look up to. He told me, he's like, your job isn't everything. Like, remember that, and you also need to have a life. have something you're interested in. If you really like your job, that's also a great thing. But make sure that you're always listening to the voice deep down. And I thought that was like something I really learned from him. And yeah, I think of that like all the time when I'm like, try to follow my heart and do things in my life. But yeah, thanks a lot for sharing. And I know you're working on your new book right now, right? Would you like to share that a little bit with the audience before we end today's episode?
Sure. So I am writing a book about it's called, well, tentatively, it's called The Finance Snake, a memoir about my billion-dollar hedge fund. And it's literally
How?
about an unexpected rise from zero all the way to, kind of like the top of Wall Street, basically.
Yeah,
And how we made so many mistakes. So it talks about like all the mistakes we made, all the
yeah,
crazy stuff that happened, all the weird
yeah,
FBI stuff, and
yeah,
SEC. We got in trouble with a lot of different people. So it just talks about
yeah,
like how we got in all this trouble, and
yeah,
why a lot of the things we had. I don't know if you've heard of like Principles by Ray Dalio, right? And he has all these
yeah,
principles. So
yeah.
when we started our company, I started off with, we wrote down our list of principles. Like, here's the
Hmm.
things that we think we
Yeah,
believe in, like having a flat
yeah,
structure. And as I talk
yeah.
about how each of those principles was wrong, almost like every single one of
Oh,
the principles I
wow.
set when I was 20 years old was like totally, absolutely wrong. And from real experiences of
Yeah.
what ended up happening to us in the end. So I just hope that it's entertaining read, and that it'll be really, just entertaining and fun for people to see
Wow.
this world,
Mhm. That's amazing. I can't wait to read it. And definitely when it comes out, I'll be the first person to read it. But yeah, thank you so much for today. It was so much fun, talking to you and having you here, sharing all the experiences. But yeah, I really enjoyed talking to you.
Thank you, Sophia. It's great to finally talk to you again. And
Yeah,
yeah, looking forward to the release of this episode.
absolutely. Thank you so much.